Oh, yeah, we are open our news.
Yes, sir. Good morning.
Good morning. You all are welcome again for our section 2 for advanced OHADA account. I believe that last time we ended on members of states of the OHADA accounting, right?
Yes, sir.
Members of state. Okay, we will just continue from there. We'll just continue from there. Can we proceed?
Number.
I think we're starting on 1.2.3 because last time we ended the class with the objective of the we ended on 1.2.2. I think so.
Yes. Yes, sir.
Okay, today we will proceed. Let us have in mind this is just a general introduction. Yes, of the system. Okay, today we will proceed with the members, the 17 countries that make up the OHADA. After that, we will follow with the institution. Is how the structure of the different functions in the OHADA institution. We will realize that they are subdivided into 4. Yes, and we proceed also by understanding which enterprise is subjected to the OHADA accounting system, because it is not all enterprises that can implement the OHADA system. And starting from there, we can now understand the different uniform acts associated to the system. Okay, without withstanding, is it Madame Jacqueline?
Pascaline.
Yes.
Pascaline.
Madame Pascaline. Yes, I don't know, can you help us and read through the member states of the OHADA?
Okay, let me read. According to Article 53 of the OHADA Treaty, adherence to the organization is open to any member of African Union or a non-African Union state invited to join the organization by mutual agreement of member states. It presents
At present,
now, OHADA has 17 members, namely Benin, Burkina Faso, Cameroon, Central African Republic, Chad, Federal Islamic Republic or the Comoros, Congo, Ivory Coast or Côte d'Ivoire, Equatorial Guinea, Gabon, Guinea-Bissau, Mali, Niger, Senegal, Democratic Republic of Congo, and Togo. Other states such as Angola, Ghana, and Liberia have also expressed a certain interest in OHADA.
Okay, these are those that make up the Uniform Act, right?
Yes,
17 countries, yes, that they all have come together and signed a mutual agreement of the member states. Mutual agreement in the sense that the benefits that country E enjoy should be the same thing that the other countries are going to enjoy. If there is any inter-country expense or cost during the treatments account, all the other countries should experience the same thing. Are we guessing?
Yes, sir.
Yes, that is those, and that is the mutual agreement. That's Article 53 of the OHADA Treaty states about the people that constitute the OHADA. Okay, now the Institute of the Uniform Act, that 1.2.4. Okay, as I earlier said, we realize that the institution is subdivided. The system is subdivided into 4 institutions. And each institution, as I earlier said, it is like a structure, a governance structure, right? And each of them have their particular activity that he or she does during the system. Yes, at the head, we have the Council of the Minister. Yes, the Councils of the Minister. Yeah, as you can see here, it is the supreme decision, meaning it is like the board of director, the head, the head of the system, right?
Mm-hmm.
Are we getting? Yes, and this system is composed. This system is composed of the Minister of Justice, Minister of Finance of all member states. Are we getting? The Councils of Minister. It is composed by of the Minister of Justice and Minister of Finance of all the member states. Meaning that as we have 17 countries, meaning the Council of Minister have 2 members in the country, right? We have the permanent secretary. Okay, ask a question.
So I was trying to say that means the Council of Ministers have 34 members.
That is it. Yes, 2 from each member state. That is it. Okay. Now the next institution, they are the permanent secretariat. Yes, the permanent secretariat have his permanent headquarters in Yaoundé, Cameroon. I think if you go to Yaoundé, you see the main system house. For those of you that are going to Yaoundé. All right.
Mm-hmm.
Yes, the main building is very big. It's situated somewhere near the ministerial area. Okay. Now, this permanent secretariat, right, are appointed by the Council of Ministers, meaning the 34 members, they'll sit together and they are going to appoint the permanent secretariat. Are we getting?
Yes, sir.
Yes, sir.
Yes, they appoint the permanent secretariat and the they are being linked or co-supervised by 3 directors in charge of legal affairs and in relation with the institution. Meaning, they first of all vote for the permanent secretariat. And we earlier said the main house is in Yaoundé. After that, we have the supervisors, the assistants. There's 3 assistants that the Council of Ministers also votes. Okay,
So
now when I've already
Okay, now you said the permanent secretariat, they are being voted by the Council of Ministers. How many of them are being voted?
Okay, the permanent secretariat is like the main house. Yes. Okay. For example, like let us take example like Bampool. Bampool have how many heads office?
Sorry.
Let us take an example like Bampool, Bambili Cooperative Credit Union. Is having how many head office?
Just one.
One. Yes. Mm-hmm. The same thing. Zone is also having one.
Okay. I understand now. I thought the permanent secretariat was like they were people.
Yeah. Okay. Yes. Mm-hmm. Okay. Okay, now the third one is the Common Court of Justice and Arbitration. Yes, it is another permanent body of the system that is located at the headquarters at Abidjan, Côte d'Ivoire. Okay, the Common Court of Justice and Arbitration comprise 7 judges. Yes, and these judges are being appointed or re-elected by the councils of ministers. Yes, and their mandate is for 7 years, renewable. Are we getting?
Yes, sir.
Yes, their mandate is for 7 years, renewable. Renewable. Okay, now within these people we have practicing lawyers and law professors of the ministers of states. Yes, these people that they constitute the common court of the justice. These are the people that they have access to. Okay, and we also realize that this common court of justice shall not consist of more than one national. Okay, let me see. More than one national of the states, more than one national of the same state, and it has just juridical function. Yes, meaning they have to be from different states, because we believe if it is the same country, there will be self-fulfillment. Yeah, that is why we, so that it can be balanced throughout the decision, the process of making. Okay, now the last body we have the Regional Training Center for Legal Officer. Yes, the Regional Training Center for Legal Officer. It is also a permanent body of the system that is attached to the permanent secretariat with the headquarters at Porto Novo in Benin. Yes, meaning these are the 4 bodies, and these 4 bodies constitute the system, right? Okay, now the different enterprises that are subjected to the OHADA accounting system, they are subdivided into 4. Yes, they are subdivided into 4.
So,
yes, we have private enterprise, and when we talk about private enterprise, we are referred to.
So, please, a question.
Yes.
Now, Madam Pascaline earlier asked a question about the permanent secretariat, that how many members are made up of. Now, with this, the other components of the Common Court of Justice and the Regional Training Center. Now, these persons in these houses are part of the permanent secretariat, right?
Yeah.
Now, can we say these are the members of the permanent secretariat?
This Common Court of Justice.
Common Court of Justice and Regional Training Center. These are these people make up. They are part of this permanent secretariat.
I don't understand.
Okay, let me explain something.
Okay, sir.
Can we get me?
Yes.
Yeah, we are getting.
Okay. In the main house, the headquarters.
Yeah.
In Yaoundé. Right. Normally, when there is 17 countries, meaning they need to be representative of all these 17 countries.
Okay.
Are we getting? Okay, for example, like you come to this Bamenda, it's not council. At the regional, Security Council at Upstation.
Yeah, regional council.
For example, when you want to, yes, regional council, or maybe when you go to the court of justice, when you arrive there, you see a zone maybe for Mezam, you see a zone for Bamenda too, and so on and so forth, right? They are representatives, the permanent secretariat. Meaning if you have issue related to Mezam 3, this is the room that is going to receive you. Are we getting?
Yeah.
Yes, sir.
These institutions have their different kata where they are located. Are we getting? All these different institutions, like the permanent secretariat is located in Yaoundé. The Common Court of Justice is located at Côte d'Ivoire, right? And the original training is located at Porto Novo in Benin. I hope it's clear.
Okay, sir.
Yeah, it's clear.
Okay. Now the enterprise subjected to OHADA accounting system. Okay, I said they are subdivided into 4. We have private enterprise. Yes, we can see the different private enterprise, state corporation, parastatal corporation, semi-parastatal, semi-parastatal companies. We have cooperative, all enterprise which produce goods, yes, for market or not. As many activities usually provide that such activity are carried out regularly. Yes, these are different types of enterprise that are subjected that are subjected to the OHADA accounting system. Okay, this treaty, the OHADA Uniform Act Treaty, when they were coming together to form their casual agreement, right? They wrote, how can I say? They had to establish some laws. Are we guessing?
Mm-hmm.
Yes, they had to establish some laws, and sometimes they are basically being called the civil law. Yes, that is why we are going to appear under the OHADA Uniform Act. Yes, they provide an overall legal framework, generally based on the civil law, meaning the laws that will govern the different institutions. Yes, and the different states that are within the OHADA system. Okay, now they say the Uniform Acts are prepared by the Permanent Secretariat in consultation of the government of all the member states and adopted by the councils of ministers after advisory opinion from the Common Courts of Justice and Arbitration. We realize that all these houses, this institution that we have been talking about, they're mostly focused on laws. The Permanent Secretariat, they are going to prepare the Uniform Act, yes, of all members adopted by the council. They send for revision to the Common Court of Law. If it is okay, they adopt it. If it is not okay, they modify it and see if it's going to be beneficial for all 17 countries, and they adopt it. Now, presently, there are 9 Uniform Acts, yes, that have been adopted and ratified by the member states. Can we see the please?
Yes.
Mm-hmm. Okay, please, can somebody just rush and read through it?
Uniform Act on General Commercial Law, adopted on the 17th of April 1997 in Cotonou, Benin, but entered into force from the 1st of January 1998. It contains miscellaneous set of rules covering the status of commercial operators, commercial registry, leasing of commercial premises, the operation and sales of business, commercial intermediaries, and the sale of goods.
Okay. Remember what I said, the Uniform Act, there are sets of laws. Are we getting? There are laws, there are just laws that have been written for a particular aspect within the member states. Yes, this general commercial law, yes, it is based on commercial operations up to the sales of goods. Okay, the next Uniform Act on commercial company. Yes, I think yes, the Uniform Act on commercial company and economic interest group, which was also adopted in Cotonou, 1997 in Benin, but entered into force. When they say it was adopted, I mean we created it, but it came into practice, yes, in 1998. Yes. Yes, that is it, right, on 1st of January 1998. Okay, it contains miscellaneous sets of rules covering general aspects on commercial enterprise. Yes, public companies, private companies, general partnership, limited partnership, economic interest group, and companies that make public offering. Yes, the laws are there. I think if people have a chance, at the end of this class, people can just download the Uniform Act, the OHADA Uniform Act. Are we getting? You see the different principles that have been stated out of these 9 Uniform Acts. Okay, the next one is Uniform Acts on Shorties. Yes, Uniform Acts on Shorties. This one was also set. It's a set of rules covering various guarantees that protect creditors by securing the enforcement of their debtors' obligation. It is straightforward, right?
Yes, sir.
Yes, sir.
Yes, we have uniform. Yes.
No, I'm saying that yes, it's straightforward.
Okay. The uniform acts on simplified recovery procedure and enforcement measures. Yes. Okay. This one too was also adopted in Gabon, right? Yes. This one contains set of rules. Covering simplifying recovering procedures and enforcement measures. Okay, this one is in the sense of the investors and lender to easily recover what's due to them, right? Meaning these are the laws that if somebody maybe invests in your company, the Uniform Act, yes, if a law that if in case the company has such issue, the investor or the lender must have this proportion of their investment, no matter which circumstances. Okay, now we have another act that was a collective procedure. Yes, for the clearing of debt adopted. Okay, it is similar to the lending. Yes, the Uniform Act on simplified recovery procedure and enforcement measures. Yes, they are still related. There are still rules covering insolvency and related issues. We have the Uniform Act on arbitration law. Yes, the arbitration law, this one is on disputes. Yes, if there's any issue arising because of the contract or for any significant value, this law can come in and check a solution. We have Uniform Acts on the accounting laws, right? Okay, now this one now came into practice. It was created in Yaoundé, right? But came into practice in such a way that we have companies that have individuals' account, right, in their different branches or different country. At the end, they need to make what is called a consolidated or a combined accounting statement. Yes, and these accounting laws, Uniform Acts on accounting law comes to adopt to tell them how they can join the different statements together and determine the global profit of the entire institution. We also understand that this law was also setting out for a comprehensive provision for accounting organization. Yes, the use of this OHADA accounting plan. Yes, in terms of maybe auditing, net income, publication of accounting information. This law states what each institution has to do during any of these activity. We also have the Uniform Act on contract for the carriage of goods by road. Okay, now this one is mostly for the buying and selling, the general aspect of buying and selling, and this one covers several items.
Hello guys, good
Let
morning.
me say creation, performance, disputes, and so on. So meaning in this law, there are other laws like
me. Can you guys get the lectures?
What was the other law? The simplified recovery procedure. Yes, it's still being related
Please,
to this law that we just read, this carriage, right? Mm-hmm. And we had the last law, which is the law of cooperative society. Cooperative society. It carries information on the general provision on cooperative society, the type of cooperative society to be formed, and the formation and the operating condition. Yes, they are just law being stated. These are the present 9 Uniform Acts. Yes, that have been adopted and rectified by the 17 members of the OHADA. Okay, now the next thing now is the OHADA principles, the OHADA accounting principles, right? Okay, now we understand that the OHADA accounting principles are universal recognized standards that make all accounting information intangible and commonly understood by all the users. Okay, there are a set of laws. Yes, you can take it like that. There are a set of universal laws recognized by all the member states or all the users of the OHADA accounting information. And the OHADA accounting information have drawn our attention into 2 different areas. The OHADA accounting assumptions and the OHADA Accounting Convention. Yes. Though in broader terms, yes, they are the same thing, but they have some differences as it's come to the OHADA accounting principle. Are we there?
Yes, sir.
No, come back
Are we
again.
on there?
Not really understood.
Okay, I said. Okay, I'm saying that the OHADA accounting principle, yes, there are set of universal rules that governs all the users of the information and all the member states. And I said to easily understand this, the system break them down or make our attention to some assumption and convention. Yes, some OHADA assumption and OHADA convention. I say in broader terms, if you want to understand the real meaning of assumption and convention, they are somehow similar, but in OHADA they have some similarities in terms of practical aspects. I hope it's clear.
Yes.
Okay, now the OHADA assumptions. I think this is not the first time we are getting about the assumptions. So this is not the first time I get about assumptions. Our detect, yes, detect holder.
So we have been dealing with OHADA with accounting principles. Accounting principles. Is it the same? We have been dealing with accounting principles. Is it the same?
Okay. Okay. Accounting principle is subdivided into and convention.
Okay. It's the same thing. Okay.
Yes. Yes. They are a subcomponent. They have classified them into assumptions and convention.
Okay.
Okay. We realize that the OHADA accounting assumptions, they represent common understanding. Okay. The assumption represent common understanding about the accounting entities and the environment under which the convention will have to be applied. Are we getting? Meaning we realize that for the OHADA accounting convention to be active, the assumption must have been stated before. Are we getting? They are generally not questions unless radical change, that is inflation, in the environment makes the assumption unreasonable. And under this OHADA accounting assumptions, we have the following main assumption, though there are many more. Right? We have the business entity assumption. That is, as a company, as an enterprise is being created and registered, right? There is when the company is already being registered, there is a clear distinction between the business enterprise and the owner of the company. Meaning at this stage, the company can be sued. The company can either be sued or the company can sue. Are you getting?
Okay.
Meaning it is not because we have created a company that I will go outside and use the company name and do a criminal act. No. At that situation, the company is like a different person, another person on its own. Yes. Okay, now we have the substance over form. Yes, the substance over form or the conservatism assumption. In some business transaction, the economic substance of transaction may conflict with its legal form. E.g., a contract that is legally leasing may in fact be equally to a purchase, that is financial leasing. Okay, now this is in the sense that one of the member states, right? What you consider like a leasing contract, right? In some other states, they can sub-partition them into the financial leasing, that is the purchase. Are we getting? Now, this convention, this assumption comes down into see how the substance can be linked in all the different 17 states. Meaning, if we consider financial leasing aspect in Cameroon to be the same aspect that the Congo, those in Congo, Cote d'Ivoire, Equatorial Guinea, are going to practice the same thing. The same method of depreciation that Cameroon is doing should be the same method of depreciation that Congo, Equatorial Guinea, and other countries within the OHADA system are also implementing. Are we getting?
Yes, sir.
Yes, sir.
Yes. Okay, if you read through the literature, you are going to understand better. Okay, now the next assumption is the consistency. Yes. Okay, now this consistency gives the application that the users of the system need to be consistent, meaning they have to use the same accounting procedure throughout a given period of time. I will get it. Not that maybe we are in January, maybe for stock valuation, you use FIFO. When you're coming to March, you use weighted average cost. When you're coming to November, you use first in, you use last in, first out.
Mm-hmm.
Yes, is it FIFO? Right?
Mm-hmm.
No. Or maybe when you are drawing a balance sheet. Let me say, yes, the balance sheet. There are different types of balance sheet, right?
Mm-hmm.
Yes, we have condensed financial balance sheet. We have condensed balance sheet, financial balance sheet, and so on and so forth. At the beginning, you drew condensed. At the end, you drew financial. No, that is not what the assumption. They assume that if you are to use condensed balance sheet, you should use it throughout. Are we getting?
Yes, sir.
Yes. Okay, now another assumption is periodicity, right? Okay, periodicity is, according to this concept, the life of a business is divided into appropriate segments and evaluation made on the performance after each segment. This is because although the life of a business is considered to be indefinite, yes, but based to the going concept, right? The measurement of income and study the financial performance of a business affects the value. Long period will not be helpful in the taking proper correction step. Okay, now periodicity is in the sense that if you have stated in your agreement that that your financial statement run from the first. Okay, like for example in Cameroon, the financial year or period in Cameroon is from the 1st of January to the 31st of December, right?
Mm-hmm. Mm-hmm.
Yes, I think in all the 17 countries it should be the same thing. Yes, the period is meaning if maybe you are going to be reanalyzing your accounting statement quarterly, semi-annually, monthly, and so on and so forth. But do in normal states, either semi-annually or annually. That is how the financial statement are being analyzed, or auditing is being carried out within the institution. These were some of the accounting assumptions. In research, you are going to see much than this, right? Yes, there are many of them. Now, talking about the convention, take note, for the convention to be applicable, the assumption have to be stated before, meaning this convention are as a result of accounting assumption. Okay. Now, these conventions are the method or procedure which have been recognized as convention or common for the accounting, meaning these are the different accounting methods that the member states use. I will get it. For example, the different method of stock valuation. Yes, all the methods are being applicable within 17 member states. Okay, now, one of the main convention is the prudence convention. The BTech student, I've already heard about this one, right?
Yes, sir. That's what we do. Accounting principles. Yes, sir.
Okay, excellent. Let's talk to us about the convention. Yes, one you know.
The prudence concept.
Yeah.
Prudence concept.
Okay, let me just generalize. This prudence concept, right?
Yes, sir.
Yes, in layman's sense, it tells us that if you foresee a loss tomorrow, right?
Mm-hmm.
You have the right to record the loss now. Are we getting?
Yes,
But
sir.
if you foresee profits tomorrow, you wait until you receive the profit before you can record them. Now that's why here we say, according to this rule, potential overvalue should not be recorded, but potential undervalue should be recorded. If I foresee a loss tomorrow, yes, I can record the loss now before it happens. But if it is in terms of revenue, until I achieve the revenue, yes, before I can record it, that is a prudence convention. Hope it's clear.
Yes, sir.
Yes, the next convention is the historical cost, right? The historical cost, meaning we record assets based on their initial price. Yes, meaning because normally in terms of the cost of an asset, we have the economic cost, which is the current cost of the asset in the market. We have the historical cost, but the OHADA accounting convention just accept the recording of the historical cost. I'll get it. Okay, we have the agreement of the closed balance sheet with the open balance sheet convention. Okay, now this law states that the closing balance of last year should be equal to the opening balance of the upcoming year. Are we getting?
No.
Okay, the agreement of the closing balance sheet with the opening balance sheet convention. Okay, for example, you have your financial statement, right?
Mm-hmm.
Okay, maybe at the end of last year, your assets, at the end of 2023, your assets, for example, your stationery were worth 1 million. You close with the 1st of December 2023, with your asset being worth 1 million. When you're opening January 2024, that same value should reflect in the opening balance. That is what he said. That is why here they said the opening balance sheet of a given year should correspond to the closing balance sheet of the previous period. That is it. Hope it's okay.
Yes, sir.
Okay.
Okay, so we have the transparency convention. Yes, this one call into sincerity, objectivity, regularity in the preparation of the financial statement. Yes, meaning the financial statement should present the true and fair view. Yes, the sincere image of the patrimony of the enterprise. I will get the profit and loss account should show the actual result of the management, and so on and so forth. Yes. Meaning, okay, the next one, significant, important, or relative important convention. Okay, now this one goes maybe to the third party. We say what financial statements should disclose all transactions whose importance can affect the valuation and the decision of the enterprise. Yes, the relative important convention. That any information that we believe that is going to influence the institution or the company, the enterprise, yes, we have to record them in our financial statement. So, hope it's clear.
Yes, sir.
Yes, sir.
Okay, now after hearing this convention, I think as of now, we can basically differentiate between the accounting assumptions and the accounting convention. That is the first assignment. Accounting, the difference between accounting convention and the accounting assumption. Okay. Now, we all know that as OHADA exists, they have some particular limitation, right? Yes, there are some particular limitation. And one of the limitation is, one of the limitation here is financial accounting permit alternative treatment. Okay, alternative treatment in the sense that they have different way they treat transaction. I will get it. If maybe you are not favored or you are not okay with one of the methods, you can choose a different method. Yes, during the preparation of their financial statement.
Good morning. I'm in class. Can you get
Financial accounting is influenced by personal judgment. Okay, this is in terms of
OHADA accounting.
How do I call it? The four institutions, the four. Let me see. Yes, the four member. The four main institutions. Yes, the financial statement can be influenced by them because we believe they are the people at the head. Right. On financial accounting, it's not important non-monetary information. Yes, this OHADA accounting based yourself on monetary information, meaning information that can be valid. Meaning they believe that anything that cannot be valid is not useful, right? It is not true. Yes, they lack in that manner. Okay, financial accounting does not provide timely information. Okay, timely information because you realize maybe by the end of the year, they say companies have to present maybe their final year meeting. I don't know. It is always either January or October. They have 3 months within which they can present. And within the 3 months, the company is still running. Also, the financial statement, sometimes they present per year. And within the year, activities are going on. And even during the period of presentation, activities are still going. Something can change. But by then, they will not include it in the financial statement because they have already drawn financial statement for a particular period of time. Financial accounting does not provide detailed analysis. Yes, if you have ever presented the financial statement, you realize that on the financial statement, it just lists the different components and subjected to their different amount. It is after now we call a financial person, like an auditor. Yes, to come and audit, to come and reanalyze the statement that you did. But the OHADA financial accounting, yes, did not impose that during the presentation of financial statement. They are, for example, in the balance sheet, their aim is to see the value, what the company owed and what the company owes. So at the end of the period, it must balance, right? Okay, and so on and so forth. Okay, now we can conclude that Cameroon, being a member of the OHADA, financial accounting is regulated by the Uniform Act on Accounting Law area. Okay, this Uniform Act of Accounting Law was one of the OHADA laws, right? Uniform Act. Can we remember?
Yes.
Uniform Act on Accounting Law. Yes, this one was speaking about how the company can create a consolidated statement or a combined account. He also talked about the obligation of an auditor, the characteristics of an auditor, publication of information, criminal penalties, and so on and so forth. That is the Uniform Act on Accounting Law. Okay. People should not forget the assignment.
So, what was it?
What we are getting? Sir?
The assignment was to differentiate.
Yes, critically differentiate between the OHADA accounting assumption and OHADA accounting convention. Okay, that carries us to the end of our introduction. Okay, based on our program, the next aspect we are going to follow is the OHADA accounting mechanism. Yes, the OHADA accounting mechanism. I don't know, let me check if I can find another audio. Okay, Opo should give me 1 minute. Let me be checking the note, please. Let me see. Hope that so far we are okay with the notion of OHADA.
We are getting generally. Hello. Good morning.
This is the introduction. As I started compiling the chapter 2. That was all about chapter 1. Okay, please. Let me try and send in the group. Okay. Let me see. Okay. Did you go have class with Dora Madam?
Yeah.
Yes, we did, sir.
Yes, we did.
Okay. It was on campus, right?
Yes.
Yes, sir.
Okay. As I just said, maybe I'll come to that campus maybe. I think after every 2 weeks, we'll have 2 days on campus. I think a whole day. Yes. Okay. Which we should open. That is the second unit. These are just introduction.
No, my
Yes,
dear,
I
just
think it should be
subscribe. You don't
from
pay for
chapter 3.
subscription.
In chapter 3, that will start recording. Yes, we'll start recording. Are we there?
Yes, sir.
Stay opening.
Let me check. Let me check what is on the time table. This is from chapter 3. Okay. We just have an introductory about the OHADA accounting system. Okay, now we will further go and be talking about the mechanism, right? The OHADA accounting mechanism. Okay, and yes, and one of these mechanisms that, let me see. Okay, yes. By the end of this series, I think we have to know about the different financial statements, how it's being measured, the chart of account, double entry principle, closing entries accounts, right? We are going to see them under this accounting mechanism. The first one is the balance sheet, right? We all know about the balance sheet, right?
Mm-hmm.
Yes, we have the balance sheet. Okay, now we have the accounting equation and we have the economic equation. Though sometimes they are the same thing, right? The economic resources or property of an institution must be equal to the claim against the resources. That is the same thing I earlier said, right? What the company owns should be equal to what the company owes. Yes, hope it's clear. Is there any need to read the literature below?
No question, sir.
Asset equals liability. Okay.
Yes. Okay, now what the company owns is known as the asset. Yes, the asset. What the company owns is known as the asset. And what the company owes is divided into 2. Yes, what the company owes is divided into 2. We have claim against the owner, which is also called the equity, right? And we have claim against the third party, which is generally called the liability. Yes. Okay. Yes. In the accounting language, right, the properties owned by a business are known as the asset, while the claim against this property are known as the liability. Okay. Now, what are what does a balance sheet constitute of? Right. We understand that the balance sheet have two sides. We have the asset side, the liability side. Yes, the asset side is subdivided into two different sides. Okay, in some books, right, it is divided into three to four different sides. But the main different component of an asset, we have the fixed asset, current asset, and cash assets. Right?
Mm-hmm.
Yes, these are the three main components of these are the three main aspects that constitute the asset side of a financial statement. Okay, now they say assets are resources controlled by the entity as a result of past events. Okay, future economic benefits are expected to flow to the entity. Yes. Okay, this is in the sense that any asset the company is holding, yes, must be generating economic return, meaning revenue. Are we getting? Yes, must be generating revenue or any economic return, any benefit in one way or the other. Now, under this economic perspective, the assets is being subdivided into four. Yes, but basically there are three. We have the fixed assets. Yes, these are assets related to the investment cycle. This investment cycle is there are assets or there are resources that have lifespan above 1 year. Are we guessing?
Mm-hmm. Mm-hmm. Yeah, fixed asset.
Yes, they have lifespan above 1 year. Okay, now, and this fixed asset is subdivided into three. We have the intangible fixed asset, the tangible fixed asset, and the financial fixed asset. This intangible fixed asset, they are immaterialized fixed assets that have no physical substance. Intangible. For example, the pattern of an enterprise. We have license, goodwill, trademark, right to listen, and so on and so forth. These are intangible fixed assets. Yes, because when the license comes, it's registered on your name. You cannot transfer it to another person. Never. Are you guessing? It's like you wake up today, you want to give your birth certificate to another person. They will never carry your same information. They are intangible assets. Now, tangible assets, here we are mostly talking about material fixed assets. Right? Take note, intangible fixed assets are immaterial fixed assets. Right? They are not physical substance, but tangible. They are physical substance. We have equipment, building, land, and so on and so forth. Yes, we can transfer it from one owner to the other. Right?
Mm-hmm.
Okay. The next one, under fixed asset, we have financial fixed asset. Yes, this financial fixed asset, they are claims resulting from the financial transaction and security or share bought with intention to be retained in the business. Okay, these ones we are mostly talking about commercial loans. Yes, participation, security, deposit paid. This like somebody can transfer his loan from one person to the other. Hope we know about that.
Yes, sir.
Yes. Okay, like let me just take this layman example. I'm having a debt maybe in let me say in one microfinance. Yes, the debt I'm to pay maybe within. Okay, let me say somebody is owing me. Yes, somebody is owing me. Let me say 6 million to be paid maybe within 5 years. Now at the end of the second year, I need money. I can go to the bank and I sell that contract, right? Normally, I'll sell to an amount lesser than that 6 million plus the interest. I'll sell to, yes, I'm going to transfer the loan that the person is owing me so that the person is not going to pay, but to the bank. Okay, now, the next type of asset, yes, is the current asset, right? These current assets are operating cycle or operating assets, right? These are the day-to-day materials used within an enterprise. Right? This is what keeps the business turning every day. Okay, now, and this current asset is subdivided into two. Yes. Though there are many more, there are many current assets. Yes, we have stock or inventory. Yeah. This one is for like for manufacturing company. Good raw material, finished product. Yes. They must be there to make the company to turn. Otherwise, the company will go under leakage. Are we getting? We have receivables. We have receivables, yes. These are rights related to the operating recycling, following the example of customer, sundry debtors, and so on and so forth. Yes. I think when you check the chart of account, you see the different receivables. There are many of them. What do we have again? Under receivable. Under the current asset, sorry. We have prepaid. We know what is meant by prepaid, right?
Prepayment, yes. We pay beforehand.
Yes, prepaid. Yes. If at the end of the year you have not yet consumed what you paid for, it will come back into your financial statement, into your balance sheet as a current asset. Yes. Okay, now the next asset is cash asset or liquidity asset. Yes, or treasury asset. In some book, you see the treasury assets. Yes. These are cash cycle. Yes, marketable security, collectible value, cash instrument. Yes, banks, cash in hand, and so on. Yes, these are medium of exchange. Yes. Okay, now we have conventional difference. Okay, this conventional difference is from a transaction, international transaction, right? This one also is somehow a subset of a treasury or cash asset. It's just that, like when we do transaction between Cameroon and US, their currencies are not the same. Yes, there are sometimes that their currency increases. There's inflation, sometimes there is deflation. The difference is what we know as conventional differences in assets. For example, I can buy something, I can place an order online on something. In China, that was maybe, let me say, in France CFA is 100,000, right? And during the process of collecting it, it arrived here that it costs now that the value of that the yen has instead increased to 105,000. This conventional difference, meaning I'm only having a loss of 5,000. You record it here. This is what constitutes the balance sheet, the fixed, yes, the right hand side, that is the asset side of the balance sheet. Okay, now on the liability side, it's also divided into four. Right? We have durable resources, current, durable or long-term liability. Yes, durable resources or long-term liability. We have current liability, we have cash liability, and we have conventional different liability. Yes. Okay. Now, in terms of durable liability, it is similar to the fixed assets. Yes, that their lifespan is more than 1 year. Yes, we have the equity capital. Equity capital, like you're part of the business, your own investment. You're not investing just for 1 year, not for 5 years or for 10 years. No. If you're maybe one of the shareholders and you have invested, maybe you want the longest duration that the company can undergo. Yes, those are examples of the durable resources. We have financial debts. Yes, these ones are results from borrowing or incurred debts. For example, bond issue, borrowing from financial companies, and so on and so forth. For example, these credit unions, sometimes when they go to the commercial banks to borrow money, they will not borrow 1 million, they will not borrow 2 million, and they will not borrow for 3 months, 6 months, no. Sometimes they can borrow for 10 months, for 10 years, sorry. Yes, the partition agreement. Yes, that one now is being recorded as the durable resources. Okay, now current liabilities. Yes, these are operational cycles. These are liabilities that last maximum 1 year. Are we getting? An example that we have here is there are sundry debtors, right? What do you have? We also have creditors. Yes, our creditors they fall under current liability. Okay, because if we look over here, we have example is debt to supplier. The debt to the supplier, they are this one is the amount we owe to our supplier, meaning to us. They are our creditors. We are the one owing them. They fall under the current liability. There are many more. Now, cash liability, yes, it's the same thing. There are liabilities or resources available within the enterprise for a short life span, less than 1 year. Yes, this one maybe can be resulting from a discounting of credit and overdraft and so on and so forth. Conventional differences, it's still the same thing. Yes, transaction within different countries, different currency. Yes, maybe you borrowed 100 USD. And maybe in France, it is, let me say, 65,000. You wake up in the morning, you realize 100 USD is worth maybe 67,000 in cash conversion liability. I will get it. Okay, now we'll go further to the classification of balance sheet items. Yes. How do they classify them? How are they being listed in the balance sheet? That is what we are going to know now. Okay. As a convenience. Okay, can somebody read this now? I will be taking. Please, I forgot your name again. Can you recall me your name, please?
Shitis.
Okay, madam. Please read for you.
As a convenience to the reader of the balance sheet and for the sake of uniformity in financial information presented in the balance sheet items are usually listed in an established order under established headings. Following these, assets are usually listed in the order in which they are expected to be exchanged for cash or used, with the most permanent assets preceding the least permanent ones. In accounting terms, it is said that assets are usually classified in their increasing order of liquidity, with the least liquid and most permanent assets preceding the most liquid and least permanent ones. Liability.
This one is in the sense that. As I said, assets are usually classified in the increasing order of liquidity. Yes. So we start from the fixed asset, coming to the current asset. From the current asset, we come to the cash liquidity. Yes, to the cash asset. That is how it is, right? Because fixed asset. Okay, let me see. Yes, fixed assets cannot easily be converted, right?
Yeah.
Because cash is already in a liquid form. Current asset can easily be converted into liquid form because we realize the maximum lifespan is 1 year. It can easily be sold. It can easily be converted into liquid form. But fixed asset, yes, the cash conversion cycle is not easy. For example, if you want to sell maybe one of your tangible fixed assets, you have to take procedure. It's not like you said, I'm selling this house tomorrow. You are not going to transfer it. It's going to overtake time. Continue reading. And the liability.
Liability elements are classified in increasing order to exigibility.
Exigibility.
Long-term liabilities, those that will be paid in the long term or that will not be paid, are listed first, followed by short-term liabilities, in that descending order in which they will come due.
Yes, after short-term liability, yes, we have now the liquidity liability. Overall, we can now see the nature of how a balance sheet look like. Why they are classifying it in that matter. Yes, meaning the liability side, we first of all list what we will pay in long term, right? We first of all list them, what we are going to pay during a long, in a longer duration. Yes, followed by what we pay in lesser duration. But on the other side, yes, we first of all list what is difficult to be converted into cash. Yes, before arriving on the easy cash cycle. Okay, now the presentation or the layout of the balance sheet based on the OHADA system, right? Based on the OHADA accounting plan. Okay, we realize that the proper heading of the balance sheet carries three information. Definitely, the proper heading of the balance sheet carries three information: the name of the business, the title of the statement, and the date for which the statement was prepared. Right?
Mm-hmm.
Yes, sir.
Mm-hmm. Yes, for instance, we can say balance sheet of where as at the 31st of December 2021. The name is the name of the business is there. The name of the statement. The statement is the balance sheet statement, right? Yes, and the duration, the date at which the statement is prepared is there. Okay. Can somebody continue reading from there?
Presentation or layout of balance sheet.
No, you can I'll just explain. Just read. The body gives an accounting picture of.
Okay. The body gives an accounting picture of properties owned by the business and the claims against those properties on a specific date. The body is therefore subdivided into two main sections. One, a first section for resources employed or properties owned by the business assets, and a second section for claims against these properties liabilities.
This property. Okay, I think in your note you see a table, A and B.
Yes, sir.
Yes, the first section is property of the business. The second section is claim against the property of the business. Right?
Yes,
okay, now the word balance. Yes. Continue.
The word balance emphasizes.
Okay, let me just
emphasize.
Okay, this word balance, as in the balance sheet, right? Just signifying that the total of the different section must be equal. Are we getting? Meaning the total of the first section must be equal to that of the second section. That is why we have seen A is equal to B. Can we see it?
Yes, sir.
Yes, A is equal to B. Okay, now we'll go on the next one, the balance sheet equation. Yes. Take note, up there we make use of the economic equation. Yes, the economic aspects of a balance sheet. And I remember we said the economic aspect of the balance sheet state that the economic resources or property must be equal to claim against owner plus claim against the third party. Right? Okay, now here we will go further to understand the balance sheet equation. Right? If we know already the meaning of these words, balance in the balance sheet, that states that the first section must be equal to the total. Yes, the total figure of the first section must be equal to the total figure of the second section. We can globally generalize and conclude that assets must be equal to owner equity plus debt, which is creditors' equity. Right? Where assets are resources, that is what we have, and owner's equity plus debt is equal to resources who provided them. Are we getting?
Yes, sir.
Yes. Meaning the asset is what we have. the other side is who provided them. The people that provided them are the shareholders through the equity investment and the debtors, which are the creditors. Okay, now at the end, we can realize that asset is equal to liability. Yes, meaning any balance sheet that you draw and at the end it is not balanced. Yes, you try to rectify or check through. And take note, a balance sheet, this balance does not mean it is well prepared. I will guess it. You can make a mistake during the provision of a balance sheet and it balanced. You think it is okay, but no. Okay. Now, the next aspect is the resource in the balance sheet. Yes, what are some of the different resources that are useful in the balance sheet? Okay, as we earlier stated, recommended to establish a financial statement after each transaction or any daily basis transaction. Okay, this was in those days, but now maybe these people, they can subdivide their season, maybe quarterly, semi-annually, or annually. But majority of the company or the institution here, they do at least twice a year. They present their balance sheet at least twice a year. Okay, now, however, when the period ends, the difference between assets and liability, right, or revenue and expense is what is called result. Result is profit or loss, which is calculated and placed under the owner's equity. Are we getting?
Yes, sir.
Okay.
This profit or loss is being determined from the income statement, right? When now the profit is being determined, it is being placed on the liability side of the balance sheet under owner's equity. Yes, now at the end, they can either see if they are going to reinvest, they are going to share, or yes, they are going to share or they are going to invest. Okay, it can be called profit if it is plus, or loss if it is negative. If it is a profit, it is written with a positive sign, and if it is a loss, it is written with a negative sign. Yes, for significant, a positive net income corresponds to an increase of owner's equity or the net assets of the business, while a negative net income corresponds to a decrease in owner's equity or the net assets of the business. Right? That is how profit can be determined. Yes, if it is positive, meaning normally the shareholders, their capital, those that they are going to reinvest, it is going to increase. Yes, because as we earlier said, assets, yes, generate economic results. Yes, because one of the rules of the OHADA said that for an item to be considered as an asset, it should be able to generate economic results during his lifespan. It should not be there just as a cost to the entity. Okay, next, the accounting period and types of balance sheet, right? I earlier said the accounting period can be defined as the period of time for which a business summarizes its financial statement. Are we getting? An accounting period, yes, can be defined as the time for which a business summarizes its financial statement. Okay, and now we are going to understand that we have the accounting periods can also be called trading period. And in Cameroon, our civil year, trading year or accounting year, as I said, was from the 1st of January to the 31st of December. That is an accounting year, right?
Yes, sir.
Okay, and such, to be able to know whether there has been an improvement, any company is bound to know its financial situation at the beginning and also at the end of the year. Because if you can determine your situation at the beginning and a situation at the end, their difference, right,
Good morning.
is going to tell you if you have improved or you have not improved. I will get it. Okay. Now, the relationship between an accounting period, accounting information, and these two balance sheets can be shown below. Can we see the framework?
Balance sheet. Inventory.
Yeah. Can somebody explain? It is straightforward, right? They say in the beginning of the year, right, we have what is called the opening balance sheet or the initial financial position. For example, at the creation of the business or at the start of a new year, we have opening balance. Now, during the year, we have accounting recording. Are we getting? Yes, we have accounting recording. And by the end of the year, there is what we call adjustment of accounting recording. That is inventory procedures, right? We adjust it now so that it's going to match with our normal situation at the end of the period, meaning the closing financial situation, which is called the closing balance. Meaning if we group them together, these 4 steps into 3, right, we realize that we have the opening balance, the accounting record and inventory procedure can group together to be known as gathering of accounting information for that period. And when we gather the information, we readjust them to form a closing balance sheet. I hope it's clear.
Yes, sir.
Okay, let me see. Okay, this is an example. Can somebody read for us?
Application. My God Limited was created on the 12th of February 2012 with the following elements: building 900,000, land 700,000, office equipment 500,000, goods 1 million, suppliers 500,000, cash in hand 1,150,000, state 100,000, cash at bank 400,000, license 50,000, borrowing 2 million, capital 2.1 million. Present the initial balance sheet of My God Limited as at the 12th of February.
Okay, remember what I earlier said, right? I said the presentation of balance sheet, that the heading of the balance sheet carries 3 information: the name of the business, the date of the statement, and the date at which the statement is being prepared. Okay, now here it is balance sheet. That is the name of the statement of My God. My God is the name of the enterprise. When is it presented? As at the 12th February 2012, right? Okay. I think this one people should be familiar with this, right?
Yes, sir.
Yes, sir.
Yes. Okay. We know what an asset is. We know what a liability is. Okay, here we have building, land, office equipment, goods, yes, and cash in hand plus bank. Yes, these are the different assets. On the liability side, we have capital, borrower, supplier, state. This state is there is a different name for this state. It is it tax? Something related like that. Yes, it can be tax to the state. It is a liability to us. Yes, because it reduces the value of our enterprise. We realize that after the arithmetic, we realize that total asset is equal to total liability. Are we getting?
Yes, sir.
Yes. Take the time and review it again. Under it, there is an application. Right? There's an application. It's just to record. These are still basic. Our main aim is on the financing of enterprise. we have financing, merger, consolidation. Those three main topics. That is where calculation will be running, right? Okay, the web application too. Yes, people can try it and do it together. Yes, people can share knowledge and see what is going to come out. Right?
Okay, sir.
Yes. Okay. Yes, you present the balance sheet of Camp Fit Enterprise at the 31st 12 and -3. Okay, now NB. It should be noted that during the year, there will be some transaction carried out by the company that will affect the initial balance sheet and cause it to be different from the final balance sheet. Right? Okay, we are going to see some of them. Okay, now, the second thing we are going to learn today is the economic flow. Right? The economic flow. Are we there?
Yes, sir.
That is 2. It is just below the NB, below the assignment. Yes. Accounting transaction, that is the economic flow. How do we recognize the transaction? How do we determine, let me say, the origin or the destination? How do we determine who is receiving, who is giving? That is what is meant by the economic flow. Okay. Okay, please. Somebody just read that one sentence, please.
Definition. An economic flow, also called accounting transaction, is the movement of assets or services within, inflow or internal flow, out or out of, outflow or external flow.
Outflow or external flow
of the enterprise. For these assets, the quantities in movements are always expressed in monetary terms.
Okay. That is what we realized in the beginning, that the OHADA focused on monetary transaction, right? And one of their limitations was that they don't have more look on the non-monetary activities, which is not fair, right? The non-monetary activity also affects the enterprise. Okay, now characteristics of an economic flow. An economic flow is characterized by the following elements: the origin of the movement, the destination of the movement, and the amount of transaction or exchange. Are we getting it? Yes, meaning each economic flow must have these 3 components. An economic flow is symbolized by an arrow which departure point, that is the origin, and an arrival point, that is the destination, as follows. This is an example. Origin, agent E, yes, is selling assets, because that is the arrow is going to agent B, right? Destination, meaning asset is being transferred from agent E to agent B. Okay, this is an example is just if it's shopping bought goods for 100,000 from Sopar on the 12th 10, 2017 and paid by cash some days. Required, present the flow corresponding to this transaction, right? Okay, now I forgot just to elaborate on something, though it is under general accounting, right? Accounting is a process of giving, accounting record, right? Giving and taking. And for each accounting transaction, it must affect at least 2 different accounts. How get it? Meaning if you are receiving something, you should be willing to also give out something. Are we getting?
Yes, sir.
Yes. Okay, like for this one, what is happening based on this flow that we are seeing? Yes, they say Faith bought bought goods worth 100,000 from Sopal. We are seeing the arrows, right? Faith is receiving goods of 100,000. And we earlier said that he paid by cash the other day, and Sopal is receiving something from Faith Shopping, which is cash. Right? We have the second illustration. Yes, this is describe a transaction that corresponds to the flow diagram of HICO Business Center by identifying what is entering into the HICO Business Center. Okay, this exercise is not here, but from this flow, we can determine what is happening, right?
Yes, sir.
Yes. Can somebody just explain to us what is happening here?
Yeah, HICO Business Center is receiving laptops.
Laptops and software.
Laptop and
Yes,
software.
laptops and software.
And then microfinance is receiving the cash.
Okay. Now we realize that, yes, 500,000, which is the sum of the laptop plus software. Okay, this was just a general view of a cash or an economic flow. Now we realize that there are different forms of economic flow. We can classify it economic flow, yes, maybe in terms of real or physical, in terms of service flow, or in terms of monetary flow, right? Mm-hmm. That is classification maybe based on nature. Yeah, we can classify them maybe based on nature or economic agent. These are the two ways they can classify an economic flow. In terms of nature, we can classify them into three. We have real flow, service flow, and monetary flow, monetary or financial flow. Okay, in terms of real flow establishes the movement of physical item. How are we getting? That is goods, material, equipment. Yes, either into or out of the enterprise. It can also be called tangible flow. For example, Sokapa sell 100 liters of palm oil to international Savon company. That is a real flow, right? The real flow in it is a 100 liters of palm oil sold to international Savon, right?
Mm-hmm.
Okay, service flow. For example, this one is the movement of services, teaching, transportation, medical examination, consultation, etc. For example, transport of customer goods by Amumeza company from Bamenda to Douala. Yes, Amumeza offer a service flow to Ngum, right? Transporting her from Bamenda to Douala. Okay, in terms, monetary flow now is the movement of cash or money or other means of settlement, right? E.g., Ngum paid 5,000 to Amumeza company, maybe based on the journey that they took. It's based on the journey that they took. Okay, this is the financial flow, right? 5,000 leave Ngum to Amumeza. Amumeza received 5,000 from Ngum. Okay, now classification according to the economic agent. Yes, here we'll find out that they can basically be classified into two: external flow and the internal flow. External flow in the sense that this flow connects or links the enterprise with other enterprises or individuals. Yes, the example above are all external flow. There are two different enterprises or two different institutions. I will get it. Okay, now internal flow. Internal flow is workshop to workshop. For example, movement of goods or services within the same enterprise. Hope the difference is clear.
Yes.
Yes. For example, movement of 100 liters of palm oil from the warehouse to the workshop. This is real internal flow. Okay, now going further to the accounting analysis of transaction with the use of economic flow. Yes, how we can easily analyze transaction using the economic flow. Okay, Our class was to go for 2 hours, right? Okay,
Yeah.
but by 6. So we all were there, or some people are sleeping.
No.
We are there.
Somebody is yawning there, I don't know. Okay. Yeah, somebody is yawning. Okay, I understand. Okay, you people can just take 2 minutes maybe and drink some more water so that we continue. We're having less than 20 minutes left. We are ending at exactly 6 o'clock. Okay, 2 minutes. You people can check water and drink. Yes, so that we can continue.
Education for all age now, mate.
The issue is if you are determined, you will not have any issue. That is it. Just sacrifice and just carry the postgraduate one time. Okay, 2 minutes. Okay, I think we can continue.
Yes, sir.
Yes, sir.
Yes. Okay, sorry. Normally, we also have a break maybe of 5 minutes. We know the 2 hours. Okay, now, after knowing the classification of the economic flow in terms of their nature and also in terms of their economic agent as it is concerned, now we can now see how we can analyze this transaction within the economic flow. Okay, now every financial transaction carried out by an enterprise is the expression of economic flow, right? Consequently, the accounting analysis of a financial transaction consists of specified or making out of some of these variables that we can see here. For example, the nature of the economic flow. When we talk about the nature of economic flow, what are we talking about?
Nature of
Hello?
economic. Yeah. What are
When we talk
talking?
about nature of economic flow, what are we talking about?
Finance.
Is it a real flow,
okay.
service flow, or monetary flow? Are we guessing?
Yes.
Yes. Okay, now, the nature of economic flow is application or destination or arrival point of the economic flow, or the use of the resources made available to the enterprise, or the use of the item transfer through the economic flow. This one now is now in terms of internal and external, right? Its source or origin or departure point of the economic flow that make the use of the financial transaction possible and presentation of the flow. Therefore, for each financial transaction carried out by the enterprise, the total application should always be equal to the total source. The same thing as we earlier said us. Yes. The size, the total of each size must be equal. The illustration, somebody should read, please.
Let's assume that Camfate Enterprise purchases goods on the 15th of October for 520,000 francs, pays immediately 120,000 francs by bank check, and promises to pay the rest later. Represent and make the accounting analysis of these transactions.
Okay. Meaning the enterprise that purchased goods, it is clear. Yes, meaning this is when you purchase goods, it is a physical flow, right? You purchase goods and immediately 120,000 That is what? Financial
Flow.
flow. And the balance is to be paid later. Is still a financial flow, right? Okay, as we can see the representation, yes, we have the application and the source, right? We have the application and the source. Okay, physical flow is the goods that the supplier is selling to complete. On the source, we have two types of source. We have the actual, which is the check now, the financial source that is being paid. And we have another financial source or financial flow, which is to be paid, as the earlier said, is to be paid earlier. Yes. Okay, now if we look now under the analysis, we realize that the application is good, worth 520,000. Now the source, worth bank and debt. Take note, they say at the end, the total application must be equal to the total source. Okay. That is what they said, right? Yes, that is why here we have, yes, good is 520,000, and the source, the sum of bank plus debt, also gives us 520,000. That's why they said in this transaction, although the source is double, the equality of source to application is respected. That is, application is equal to source. 520,000 is equal to 120,000 plus 400,000, right? Okay, now let's further assume that the debt is settled on the 30th, meaning the debt that was to be paid later is settled on the 30th of November in cash, right? Yes, the debt was settled now in cash. Okay, now we realize now this is now the second representation, meaning on that 30th, right, the nature of the flow that is going to be there is going to be financial flow. Are you getting? Yes, the financial flow. Take note, it was a debt, but now it is clear debt. Just now on the analysis now we see application, it is debt. Yes, it was owing 400,000, but now the source declare it debt through cash, right? In this transaction, the equality of application, the equality of sources to application is respected. That is, application equal to source, 400,000 is equal to 400,000. I think below it, there is a tax. As yes, people can join together and go through it, right?
Yes.
Okay.
Yes. It should be noted that while preparing a balance sheet, what is used is the balance sheet of each account. What is used is the balance of each account, sorry. When preparing a balance sheet, right, we make use of the balances of each account. And anytime there is a transaction, the accounts are affected. Anytime there is a transaction, a particular account, at least two accounts must be affected. That is the principle of double entry. Yes, that is the principle of double entry. Okay. Let me see. Okay. Now, the next one, the recording of transaction in an account. I think maybe you have to prepare and go to work. We can stop now, right?
Yeah, okay.
Yeah, but we should not forget the assignment and the two tasks that you people will do together. We're going to do that one together. And please, you people should read in advance. Yes, this recording of transaction, so that our next class, I think if we can finish this, yes, if we can finish this, we will now enter. Let me see. If we finish this, we will now enter account. Let me see this. Okay, let me check something, please. if we finish this, let me see. Yes, if we finish this, we can enter to merging operations. Yes, right? Yeah. We can do merging operations. We can do consolidation of financial statement. Before now, we go now on investment. Yes. Before we go now on the investment, maybe the financing of an enterprise, maybe through borrowing, or the financing of an enterprise through equity, right? Okay. Let me see. Okay. Though the financing of enterprise through borrowing, yes, that is loan and so on and so forth. Just accounting transaction. There are just some few calculations to be made. Few calculations. Let me see. Okay, it's like when we went after next class, we said do with financing of transaction through borrowing. I think that will be better. Okay. Is there any question?
So what
there's no question.
Okay. I think we can call it a class. Okay. Is the 4 a.m. class preferable than the 8 p.m.?
For me,
or we can be swapping. But for me, this 4 a.m. is convenience because we have realized there is no network interface or any other thing, nothing. Yes, the network was really stable throughout the class. Okay, when should we meet again?
We're making a fixed program already now since we have taken. We met on Wednesday. Our meeting today, so 2 times a week. They think we don't know when we don't know when the other lecturer is coming in. The lecturer for entrepreneur.
No, the issue is that if a program that we are meeting on Sunday, 4 a.m. If they are programming any other class again, it's just supposed to tell the person that we have a class by then. They should do another day. That is how that is how we are going to be functioning. Okay. What of a class? Let me see, because I'm planning to have a class with year 3. Okay. What of a class on Monday, 4 a.m.?
4 a.m.
Yes, Monday, 4 a.m. Because today is Friday, right?
Yeah.
Mm-hmm.
Yes, today is Friday. Yes, we have a class on Monday, 4 a.m. Because the earlier we do this, though, I hope that I'm not fast.
But you come for revision now soon.
Of course. I said we'll be having face-to-face classes maybe every 2 weeks. Yes. Meaning every 2 weeks we must have face-to-face classes. And maybe there are also some chapters that there are also some parts that we must teach it on the board. Yes, we must take it in class so that the practical should be real. Right. Okay. Meaning after this call we have agreed that we have a class on Monday 4 a.m.
Okay.
Okay. Thank you all and have a blessed day.
Better one for you.